Chancellor Olaf Scholz insists there is no reason to be concerned about Deutsche Bank. Will his verbal assurances be enough to calm an increasingly nervous stock market globally?
Good morning, Sri. Well, I think the market's probably going to probe any signs of weakness to see if they push hard enough, things will break. And what you've seen over the weekend is just the latest manifestation of that. So I think this type of activity will continue. It's not that there's anything particularly wrong with these companies. It's just they're standing out a little bit from others in terms of ideas around their structural strength or the idea that they may have something below the surface which has not come to light. For us, I think this heightened sense of risk across some of the financial markets is likely to stay, particularly in the banking sector. But fundamentally, a lot of these companies are still quite strong. And I think you'll hear more of these verbal reassurances from many regulators and many officials to reinforce that message as they really do try and stem the idea that we could be facing another credit crunch, whether in Europe or the US. And fundamentally, I think if you look at the European banking system, you've had over a decade of regulation being applied since the European debt crisis. A lot of the liquidity provisions were never removed from what was previously there. And so I think there's already in place a lot of the tools to reduce some of the risks that, may have flared up back in 2012 or 2013 that we don't expect to see repeated.
Kerry, you probably shouldn't underestimate the role that hedge funds right now are playing. Obviously, a number of conspicuous ones absolutely got crushed over the last 2 weeks, but the ones that are still standing, they're sort of looking around for the next bank to short, no?
Yeah, absolutely. When the markets are volatile, it's time to be an active manager, and hedge funds are the most active of active. They're going to benefit as investors have been looking for ways to diversify their portfolios and thinking about that negative correlation you generally see between a hedge fund index and things like a 60-40 stock bond portfolio. In times of stress, we've seen that correlation be persistently negative, as it has in the most recent episode. And again, I think hedge funds are going to actually benefit from having those higher cash rates. We think about their collateral or the cash they have on deposit to try and take advantage of that. So for some strategies in hedge funds, such as macro or relative value, you could actually see an opportune time in the markets. And I think, again, this really does reinforce this point, is we have this near-term pressures on the market. There's a lot of risk aversion right now. But fundamentally, I think you're going to see an attractive entry point for lots of long-term investors really start to appear as we think about prices coming down in some of those assets, which have been slightly elevated in the past. And again, we think about that
Kerry,
big shift we're seeing in the fixed income market.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.